Ukrainian President Volodymyr Zelensky. Oluwadapo Thomas, an international financial analyst, joins us now on the program from the UK. Thanks for joining us. We heard earlier the EU Commission President saying sanctions aim to decay Russia's economy, and she talked about economic, financial, also technological. But still, the Ukrainian president is calling for more sanctions. How much of this can the Russian economy withstand?
Well, the truth is, Russia is in for a lot of financial ruins. So, like I usually tell people, there are two ways to fight a war. You can go through physical military warfare, or you can go through financial warfare, which is the route the West have decided to take. Now, sanctions, in a way, as Vladimir Putin has said, it is an act of war because you are trying to cripple an economy. And this is a four-stage scenario in which this will affect the Russian economy. First, it's going through the currency, and you can see how the ruble reacted and depreciated when the first sanctions came in. Then also the economy will contract. So we're looking at 15% GDP contraction next year, 3%. So that's basically removing 15 years of economic gains that the Russian economy has made. So you're taking them back to 2004, 2005. Now, the next stage is now how companies will try and avoid or averse legal and reputational risk by dealing with Russian countries, the Russian country on its own. That's why you've seen companies move away from Russia. A lot of companies are moving away. A lot of staff are moving away. Then you're seeing brain drain. And also, US and UK holding out onto technological exports to Russia. We'll see them not develop. So the idea is to turn them to, what will I call it, a pariah state. And that is where they're doing it.
I'm also really worried about the Russians themselves, who are, well, you can say they're innocent bystanders in all of this, and what really happens to them, their pockets, their income, their lives and their livelihood with this war in Ukraine. But then the EU has agreed new sanctions against Russia, including a ban on Russia coal imports. Japan, a major importer, also joined in. But can Europe survive without Russia? And this is also without, feeling a sense of shame, seeing as, well, they're still paying Russia billions of, euros for fossil fuels.
Well, in terms of coal, it's quite negligible. And when I mean negligible, we have to look at it from the bigger context. Now, the European Union pays $850 million per day for Russian oil and gas. For coal, they pay $20 million. So when I say it's negligible, you see that it's a small amount. So if you evaluate supply and demand, you get to see that the demand for Russian coal has reduced. And even before the war, or before Russia invaded Ukraine, EU has found a way to reduce their dependence on Russian coal. And this is because of climate change, because, coal is one of the fossil fuel that is really affecting the climate change. So Russia has already they have been losing before the war. So currently, it's just to spark up and finish the exports, and that's why we're looking at it by mid-August. Most of the European countries will not be exporting or will not be importing coal from Russia. So Europe can survive because this demand, there's sufficient amount. It's a well-functioned commodity market. There's a lot of coal in different countries. We're looking at US, Colombia, and thereabouts.
Ukraine President Zelensky has also been clamoring, pressuring, the West for a ban on Russian oil and gas. Do you see this happening next? And do you see it happening real soon?
Oh, yes. The European Parliament has agreed to and resolved that no fossil fuel, so oil, gas, and coal. So it's just about finding where they can fill these gaps. So like I said, with coal, you can fill the gaps from quantities from United States, South Africa, Colombia, Australia. Australia also supplies 1/3 of the coal that goes into Europe. With gas, you're looking at the UAE, you're looking at other countries, in fact, even possibly Nigeria, to try and fill in the gas in little quantities. And for oil, that is why the United States has tried to parley up with Venezuela and Iran to try and replace the. So it's finding a way to alienate Russia, although it will take time. It's quite strategic. Russia is a big player. It's #1 natural gas exporter in the world, top 3 oil exporters in the world. So to eliminate them from the whole financial system or the whole commodity system will take time, but they are well on the path of doing it.
Do you think this will guarantee an end to the war? All of these sanctions, over 8,000, Russia is now the highest sanctioned country in the whole world.
Well, if we're looking at it historically, I'm sorry to disappoint you, but sanctions have never ended military assault or a regime change. If you look at Venezuela, they've been sanctioned a few years ago, but we still have Maduro, who's still the president of Venezuela. The same thing with Iran, and now they're still saying they're still going to build their nuclear weapons. So sanctions doesn't really change the mindset, and I feel Russia have calculated what will I call it, the sanctions that were coming. They have prepared for it. The gloves are off, and that's why they might not. They don't seem to be perturbed, or they don't seem to even try and negotiate, and they're still going on with the whole offensive. So the truth is, historically, there is no way where sanctions have changed the direction of an aggressor, but it's a way of punishing them, which is working because, like I said, the popularity of the Russian citizens, of the Russian president, is going to diminish because you have put the citizens into financial jeopardy, and you have basically tried to depreciate and reduce the strength of the major currency, which is the ruble. So these are the things that will try and slow it down. So the idea is to reduce the financial war chest of Russia, but to stop the war, historically, there is no basis for that.
Let's come back to some of the sanctions. I mean, a discussion is still to be had, especially where if Europe is prepared for the possibility of a prolonged elevation in their energy prices as a result.
Well, Europe will also suffer from this, and that's the truth. It's one of the 4 stages we have evaluated. The truth is high energy cost was going to lead to inflation, and possibly we're looking at recession. So because the truth is we're just coming back from the pandemic, and you can see how the European Central Bank has changed that tone or that tune in increasing interest rates, because they have to now effectively factor this war, and they're trying to avoid stagflation in the Eurozone. So European countries are, what do you call it? They are going to, they understand that their citizens will suffer a bit from increased commodity prices, because the truth is natural gas now is on the high, oil prices in triple digits. Before we see oil go back to sub $40, sub $50 now, it will take time because you are dealing with a big player, and Russia is top 15, top 10 economies in the world. So to eliminate them from the whole commodity system will require everyone to take what I call it losses, including the European citizens. So it will elevate energy prices, and it will possibly lead to inflation and recession. But that's the price everyone is ready to pay to see that Ukraine survives this Russian assault.
In this war in Ukraine, who do you think, where do you think the gains are being made, the countries that will be benefiting from this war?
Oh, the countries will be benefiting are the countries that hold key commodities. Now, like I said, coal, South Africa is going to get some more money from coal. Colombia is already increasing their exports to 14 million tons. United States is increasing their exports to 9 million tons. Look at Poland, look at Czech Republic, look at Germany. These are domestic coal producers. So it's the countries that can fill up the gap. Venezuela, they thought the oil economy was gone, but now they are back. They have started making money, and they've started trying to get investment to ramp up production because they have been assisted by the United States. So Venezuela's economy now is coming back to the foray. So the countries that hold the key commodities that Russia have monopolized are the countries that will gain from this whole war.
Let's come to Russia's central bank. Yesterday, they cut key rates from 20 to 17%. How impactful is this move to Russia's economy in the current situation?
Well, it's a bit contextual. And when I say contextual, is if you look at it from a bigger time frame, you understand that it hasn't reduced the financial stability risk that are in the Russian economy. So if I go back in time, in December 2021, 8.5% was the value of the interest rates, and increased to 9.5%. And when the war started, the Central Bank of Russia increased it to 20%. So bringing it down to 17% ignores the fact that it already increased from 8.5%. So they have looked at current data, and what data they're looking at, the consumer price growth rate, and says, okay, it has stabilized. And this is showing in the exchange rate dynamics. The truth is that the ruble has effectively wiped off all the losses it has made since the beginning of the war, which makes analysts question, are the sanctions working, or is the government really supporting and lending support to the Russian economy? Is it an artificial or synthetic rally, like I said earlier? So the truth is, it shows that the Russian economy has taken a small hit, but that is in the short term. In the long term, there are inflationary issues. They're still going to face the issues. The credit market is already at risk. And also the banking system is at risk because the banks cannot provide financial intermediary services for consumers, which has also long-term effects on the financial system in Russia. So the truth is we need to wait for some time to look at and evaluate how long and how detrimental the sanctions will take on the Russian economy.
We appreciate your time, Okolua Dapo Thomas, an international financial analyst joining us from the UK. Thanks for joining us today.
Thank you.